Hey y'all, so I wanted to come on here today and make a video, well, a quick video, just explaining the process and what all you need to get started on your home buying journey. And I would say that the first thing you need to do is know your credit score. We have to know exactly where you are before we can get you where you need to be. So in order for you to qualify, you will need at least a 620. I always say a 640 because you can get great interest rates and down payment assistance programs and things of that nature, but you can still qualify to buy a home with a 620. The next thing I would say is to have 2 years of verifiable income. So that means have consistent income for or employment for the last 2 years, or if you are an entrepreneur, then you need to have at least 2 years of bank statements and 2 years of your tax returns. Also, if you are an entrepreneur and you are tearing them up with those deductions, they're going to count your income after all of the deductions on your tax returns and not the gross. So for instance, if you'd have made 60,000 but you tow them up with them deductions so that you won't owe in and that you will get a tax refund, and it brought you down to like 35,000 or 40,000, that's what'll be counted and not the 60,000. So that will make you not qualify for a bigger loan like it would if you had the 60,000 instead of the 35 or 40,000. Also, when you talk to your realtor and they ask you questions, they're not trying to be nosy, they're not trying to be in your business. They want to kind of pre-qualify you before they send you to a lender, because honey, these lenders be thinking that we just sending y'all to them. We ain't pre-qualifying y'all. We going off of what you're telling us, and then they pull your credit score and you don't qualify. You done told us you had a 620 or a 640. They pull it and it's a 520, and we do not want to have people pulling credit and doing all of this paperwork and you filling out applications and all of that stuff if you know you're not going to qualify or be approved. I would rather you be honest with me and let me get you to where you need to be so that we can move forward with the process, and we don't want to waste anybody's time, because everybody's working hard here. Everybody's dealing with a lot of people. And, we just want to be considerate of other people's time. And then once you have the 2 years of verifiable income as well as the 620 credit score, the next thing they're going to look at is your lates. So if you have had any late payments within the last when I say late payments, I mean 30 day, 60 day, 90 day, 120, anything of that sort. If it is a 30-day late, it doesn't need to be within the last 12 months. So for instance, if you had a 30-day late 6 months ago, you will have to wait 6 more months before you can qualify for a mortgage loan. If you have a 60 to 90 day late, then you will have to wait 2 years, which is 24 months past that late. So say for instance, you had a 60 to 90 day late 2 months ago, then you will have to wait 22 months from now before you will be able to qualify for a loan. We don't want you making any major purchases within the last 2 years. So if you just bought a car in February, you will have to wait 2 years before you can qualify for a mortgage. They want to make sure that you can pay for your car and don't have any late payments before they will let you get pre-approved for a loan. Really, I hope this was helpful. And if you have more questions or you want me to go more in detail, don't hesitate to comment below or to send me a DM, and we can jump on a call and discuss your specific situation. So, follow your girl, and I'll talk to you later. Bye.